What is less risky for investors? Renting a property or lease to own? So I got to just say, I love questions like this because they're the exact same thing. All right. So first off, renting a property, rent or lease, they're simultaneous. You own it and you're giving somebody the right to occupy it. So you're licensing the use of that property. A lease to own is a fancy way of saying a rental agreement or a lease plus an option agreement that they can exercise at some point that allows them to buy it from you. The day that you no longer own it is the day that you don't have liability for things that happen on that property. Even if you sell a property, you could be liable for things that you did not disclose or should have disclosed, or environmental issues that occurred during your ownership that you may not even be aware of, which is why we use LLCs and things like that. So the fancy answer is they're the same thing. Neither one's less risky. The lawyer in me wants to say, maybe you were going to do an owner sale and carry the contract, carry the paper. That means that's less risky. Now you don't own it, so you're not subjected to the person who falls down the stairs on the property suing you because you don't own it anymore. You still have an income source coming in off it, though, similar to a rent.
Now, I've seen some of these lease to owns where maybe they're getting $1,000 a month, and part of it's going for rent and part of it's going towards purchasing the house.
Yeah.
Do they have a obligation to repay that money?
It depends on the option agreement.
Okay.
So in any of these, it's always like it depends on the paperwork. So I have a lease. So I lease my house to Jeff. And that lease agreement says it's $3,000 a month. Then I have an option agreement. It says, Jeff, give me $5,000 and you can buy my house at X number of dollars. Plus, we're going to apply a portion of that, whatever the rent is, $3,000 a month. We're going to apply that towards the purchase price. So I'm just receiving $3,000 a month in rents. I'm just getting the rent payments. That option agreement, even if he pays me $50,000 up front on that option, by the way, that's not taxable. Not until the option expires or is exercised. So I get some free money for a while. Now, I've known people that don't like to report that when it does expire, which that's called tax evasion. You go to jail for that. But technically that option payment isn't taxable. It's not earned yet because they haven't exercised the option. So we don't know what it's going to be. It's kind of fun. And then you just apply a portion of it towards the purchase price. But you've already paid tax on that as the one who's been renting it. So you don't have to worry about that. That just lowers the purchase price in your book.
Right.
So you have less capital gains when it sells. Don't you love stuff like that? I do. That was a rhetorical question. You're the CPA.
Absolutely.
Yeah.
It's great.
See? All right.